quitting your boring and stressful 9 to 5 in order to live off of crypto investments. That's actually an approach many millennials are following. Sounds awesome, but is it really a good idea or not? Getting up at 6 a.m., working for 8 hours every day for tons of stress just to make maybe about $2,000 a month? We've all been there. And we've all asked ourselves if there's a way out of this hamster wheel. And as it seems, for many young Americans, crypto trading seems to be the way out. Stick until the end of this video to find out all about whether you should quit your job in order to become a full-time trader or not. The motivation for taking this step is obvious. We've all heard the stories about how some people have earned a lot of money trading cryptocurrencies. Yet there are unfortunately also those who lost a lot of money doing the same thing. Cryptocurrency exchanges have proven to be simple targets for hackers due to their fluctuating value. Is Bitcoin trading, on the other hand, a feasible way to create a full-time living? Before you begin investing in Bitcoin, you must first analyze your current financial condition. It's crucial to know how much money you have to invest and how much you can afford to lose. Investing without a clear mental picture of your money is destined for failure. Buying and selling Bitcoin, like any other kind of trading or speculation, does not guarantee profit. You should keep track of your income and expenses. Don't start with the quantity of money you have in your bank account right now. To get a good image of your financial situation, you need to know what monthly obligations you have and what revenue sources you have. Utility bills, for example, will vary from month to month, but an average number can be calculated. By the way, are you day trading cryptos or are you keeping them as long-term investment? Let us know in the comments section down below. This should give you a good first overview of the possibilities crypto trading offers you. But why is it even becoming that popular recently? The answer is closely connected to the COVID-19 pandemic. The COVID-19 outbreak only 17 months ago sent financial markets tumbling by 34% and the economy into one of the worst slumps since the Great Depression. The disaster should serve as a warning to everyone who does not have a financial strategy or thorough knowledge of investing basics. It occurred just 13 years after the Great Recession of 2007 to 2009, which was precipitated by a collapse in the U.S. housing market. Despite the fact that both meltdowns occurred recently, Wall Street officials and financial professionals claim that many American amateur investors lack knowledge of money, markets, and investment. Cryptocurrencies are one of the most popular investments, while being one of the newest and most volatile. They are essentially digital currencies that are created and exchanged via a decentralized computer network that protects and verifies transactions using code. If Americans have a general lack of financial knowledge, it's also true that they are unfamiliar with the intricacies of this asset. In the United States, more than half of people feel they are not very or not at all educated with cryptocurrencies. Also, would you consider yourself to be very educated about cryptos? Make sure to write your thoughts in the comments section. Talking about education, the first step in educating yourself should be to do your research on the exchanges out there and locating the right one for you. If you want to trade Bitcoin, you'll need to register with a cryptocurrency exchange, which will allow you to buy and sell digital currency at will. Using one of these exchanges, you may also convert your Bitcoin into another type of cryptocurrency. This is something you should consider doing if you want to protect your investment. You'll need an exchange to execute your trades on before you can even think about pursuing such tactics, though. A significant growth in the number of Bitcoin exchanges has occurred during the last decade. Despite the fact that there are several alternatives accessible, the vast majority of traders have chosen only a handful. Preventing yourself from signing up for any exchange requires extensive investigation, as well as reading reviews and comments from other users. The vast majority of exchanges offer the same basic functionality as one another. However, a small number of individuals have distinguishing characteristics that make them stand out from the crowd. Some exchanges, for example, specifically permit the use of trading bots, making it far simpler for them to conduct business on the platform. When it comes to the traditional stock market, trading bots are commonplace. The use of trading bots to automate trading operations is becoming increasingly popular among individuals and organizations such as hedge funds. With the exception of the fact that they trade Bitcoin instead of stocks and shares, Bitcoin trading bots are identical to stock trading bots. Maybe those could actually be the way to go for you. Still, there are a lot of possible mistakes you have to watch out for when starting your trading journey. Young investors make two crucial mistakes when trading cryptocurrencies. Their investing time horizon is too short, and they collect too many risky speculative assets in their portfolios. Day trading is dangerous for inexperienced investors since cryptocurrency prices may fluctuate dramatically within a day or even minutes. Professional traders, for example, must pass exams and get a FINRA license in order to execute orders for Wall Street stocks or brokerage firms. Ordinary Mike in America, on the other hand, is not required to do so while day trading for himself. Experts believe that one of the difficulties with retirement planning and investing is that most states do not mandate high school students to participate in financial literacy programs. Millions of Americans graduate high school each year without understanding how to budget, pay taxes, open and manage a bank account, or set aside money for retirement. The pandemic has been a boon to speculative sections of the market like cryptocurrencies, with 68% of owners having bought it for less than a year. Younger investors are looking for money to buy a house or a car, as well as merrier travel. However, some of them aren't placing themselves in a position to invest over the next 50 years because they are in debt or have low-paying employment. They're just doing it for 3 or 4 years to meet short-term needs, which forces them to invest in high-risk assets such as cryptocurrency. Of course, investing and not even day trading with cryptocurrencies is necessarily a bad decision. In fact, as we all know by now, you can earn quite a lot of money with it, but only if you educate yourself about investing and only invest money you are willing to lose in the worst-case scenario. As long as your investment earnings aren't higher than those of your regular job, you might not be ready to take the step out of the hamster wheel just yet. What do you think about crypto investing as a full-time job? Do you think it's too risky to go all in on it? Let us know in the comments section. This brings us to the end of today's video. Hit like if you believe in the future of the crypto market, and don't forget to subscribe to our channel so that you don't miss any of our updates regarding all of your favorite cryptocurrencies. Also, watch the 2 videos that are on your screen right now, because trust me, you don't want to miss out on that information. Have a nice day, and I'll see you in the next video.